Hello everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator we just launched for ZIL. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you've seen our videos launching other risk indicators in the past, you're probably quite familiar with these types of graphs. But what I'm showing you in brief is the price history of ZIL across time with the price plotted here in logarithmic form. Each dot is a day, and each day is color-coded based on the output of our risk indicator, the Upside Downside Potential Indicator, or UDPI. So the way you can read this output is a score of 5 is high risk. That's when the upside potential is quite low, downside potential is quite high. -5 is low risk. That's when the upside potential is quite high, downside potential is quite low. What you can see is that across time, the UDPI has been pretty great at identifying these low-risk zones in ZIL's history, as well as these high-risk zones, these tops or local tops where there have even been corrections coming off of them or kind of corrections into sideways kind of action. And so, as you can imagine, if one had been looking at the UDPI and using it to time their entrances and exits from the ZIL market, one would have done quite well. One would have been able to buy at these really historically advantageous times and then sell at these times when it seemed like ZIL was getting overheated and that it was likely a correction was coming, and then potentially rebuying in at these low-risk zones again before riding the moves to the upside. So we just saw that kind of play out here again in the summer, where the UDPI identified the summer as being a pretty low risk zone, and then indeed ZIL went ahead and put in a pretty nice move to the upside, about a move from a little over 5 cents all the way up to 13, 14 cents, that kind of general range. A pretty nice return on investment. We ended up kind of coming down and kind of consolidating here for a little while. So another way that we can look at the output of the UDPI is, instead of just plotting the dots according to the output, just look at the raw output across time. And so what you can see is that the UDPI kind of bottoms out at these low risk zones and then spikes up to these high risk levels once it seems like ZIL is kind of tapping out its upside potential and has a lot more downside potential left to realize. So one move that I think is useful to look at, because I think this actually gives a pretty interesting kind of case study for different things that we talk about on the channel, is looking at this move that ZIL put in from around November of 2020 into the end of December in 2020. So it ended up being the case that ZIL did about a 10x move in that time. And if we go back to the price chart here, it's really this move here that I'm talking about here. It's about a 10x move. And you'll notice that the UDPI really spikes up. This is that getting up to level 5 we just saw in the next, what we see in the next graph, before kind of going into this sideways action. Now you'll notice that this was kind of the first leg of the move, that after this consolidation point, the UDPI was falling a bit, and then ZIL did go ahead and realize a lot of that upside potential. But it's also important to realize or to note that this move here was about a 10x move. This move here was only about between a 2 to 3x move. So again, nothing to sneeze at, but not nearly as large of a move as we saw coming out of November. So this would be the 10x move. This would be that 2 to 3x move that we just were looking at over there. So, one way that you could look at this, if you were only looking at the UDPI for ZIL, for example, maybe what you would have done is had been acquiring down at these low risk zones, getting down to -3, and then selling off at these high risk zones up here, and then maybe re-entering the market here to ride that next kind of leg of the market that it did. One would have done pretty well doing that. But what's important to note is the 10x move. That's the big meat of this move. That's where the bulk of the money was made. This 3-ish x move from here is still nice, but it's not nearly as large as this one here. And so the question that I want to be addressing, where I think that this provides a useful historical example of this, is maybe another thing that one could have thought about this time is, instead of just selling this here and maybe looking to re-enter, or just holding through this and hoping that ZIL goes higher, if one had access to other UDPIs, so other risk levels for other assets, maybe what one could have done is taken this 10x profit, looked at another asset that hadn't run yet, and then put the profits in there to run another even larger multiple, another potential 10x. And so the asset I'm going to use as an example, although there are other ones that you could have slotted here instead of ADA, I'm just using ADA as an example here, if we look at what ZIL did, ZIL kind of ran before a lot of altcoins back November to December. It kind of moved a lot more quickly. Most of the other altcoins didn't put in their moves until kind of the spring, around about that time. And so if one would have had access to a ZIL UDPI and an ADA UDPI during this time, and one had a ZIL position, one would have just taken that really nice 10x move, would have had a 10x profit they were sitting on, and then one would have to make a decision at this point. Do I just hold? Do I sell and try to re-enter? Or maybe I sell and I look at other assets and see how risky they are in the moment. And you'll notice that at that exact point in time, when when ZIL was spiking up on its risk level, ADA was sitting up here at about a 0. Significantly lower risk at that time. Significantly lower. And so one could have done is say, okay, at this point, ADA hadn't put in a crazy move yet. Maybe I'll move my 10x profits from ZIL into an asset like ADA that hasn't put in a big move and is pretty low risk, and then ride it from there. And if one had done that, ADA went ahead and put in a 10x move from this point. So one would have taken a 10x move from here and then compounded that by another 10x. That's a 100x move in total. That's a 100x profit in total one would have gotten by riding ZIL, moving it in, riding it in ADA. Here I'm showing you some screen grabs from TradingView, just showing the price action of the two assets at that exact point in time. And so here is ZIL when it just put in this 10x move coming out of November here into late December. That exact same day over here, ADA was sitting at somewhere around 11, somewhere between kind of 11, 15 cents, kind of depending when exactly we would have gone in. Somewhere in that kind of general ballpark is where that entry point would have been. It then shot up to over $1.30, almost up to $1.40 in just that move there. It put in a 10x move, basically, around about a 10x move from that point. And so this is where having these multiple UDPIs can be super helpful, because it's possible, like what ZIL did in coming off of December. It's possible it'll just consolidate for a few months and then put another leg into the upside that you can make some nice some other gains. But oftentimes those gains, at least historically, they're not necessarily going to be as large. When we look at the ZIL UDPI, it only dropped to still a pretty high risk zone. It wasn't tapping out, it wasn't at the super high, but it wasn't low risk either at this point, suggesting that the upside potential was there, which it ended up realizing a chunk of it, but it didn't have nearly as much upside potential in it at that point anymore that something like ADA did at this point. And then sure enough, ADA put in a 10x move, while ZIL was only able to put in another 2 to 3x move from here. And so that's where having these multiple indicators is very handy, because once one asset has put in a crazy move to the upside and it's really tapped out its upside potential, it's gonna take a while for it to probably be able to take another move to the upside. And even when it does take another move to the upside, it may or may not even be that explosive. It may or may not even match that previous move. Whereas going to an asset that hasn't put in the crazy move yet, then you can ride that same initial kind of impulse. In this case, it was a 10x move that ADA put in, and then take some really hefty profits. That's at a 100x move. And if one would have really pushed that strategy to the next level, what one could have also done at that point is that by the time ADA put in that crazy move, Ethereum was actually sitting at a relatively low risk zone. It was a little bit high. It was at 1 around about at that point. But then Ethereum ended up putting in about a 3x move from that point up into the top end there before we got the crash in May. And so that would have ended up resulting in an overall 300x profit if one would have taken this joint 100x move by moving from here to here, and then move from here into Ethereum, ride that for 3x, get a crazy move. So none of this is financial advice. Form your own strategies, form your own opinions. But this is just one of the things that we think is a utility of having multiple risk indicators across the crypto space. Is not only can you see how risky an individual asset is, and maybe thinking about when might be a good time to enter and exit that particular market, but then also, if you have just made a bunch of profits in one asset, is there another asset that's low risk that hasn't moved yet that you could just move those profits into and then ride it even further, compound the profits even more? And that's something that you're given with multiple risk indicators that you wouldn't have with only one, and you certainly wouldn't have without any risk indicators. One risk indicator is better than none. Many risk indicators is better than one. That's one way of thinking about it potentially. So to talk a little bit more about where ZIL currently is in the perspective of the UDPI model, where we stand right now is at a score of 0.3 with ZIL. So that suggests that the UDPI thinks that there's slightly more downside potential than upside potential, but overall it's basically even. You know, it's roughly just an equal risk-reward ratio according to the model right now. So kind of just neutral, not overheated, but also not in a historically maybe fantastic entry point. It's not financial advice, but that's just what the indicator is suggesting for ZIL currently. And just to reiterate on that earlier point, you know, on this channel, we've been launching many different indicators for many different crypto assets over the past several weeks, and we plan to launch a bunch more over the coming weeks. So, you know, stay tuned. You know, subscribe to the channel, follow us on Twitter to get updates about those as we release them. So we're currently up to 14 indicators. And as you can see that when you look across these, it gives you a nice little indication of where different assets sit relative to other ones in the crypto space. You can look and see which assets are a little bit maybe undervalued, you know, ones where the upside potential outweighs the downside potential, and that at entry points might be a little bit more favorable at those points. Or assets like DOT currently, which is quite overheated, and it's maybe not the best time to be thinking about an asset like that. So again, not financial advice, form your own opinions, but this is one of the big use cases we think of having multiple risk indicators, is that you can watch what's going on in the crypto space. If you have a position that just puts in a massive move and that indicator is spiking up to the high risk zones, then that suggests that you can then, if you're taking profits, look at other indicators, look at other assets, see which ones are lower risk, potentially be able to ride moves that they'll put in that would compound your profits even more, and to a greater degree than you get just holding that original asset, or just maybe re-entering that asset in like a month later, like we saw with the ZIL, versus moving those profits into something like ADA historically. All right, if you like the content, remember to subscribe to the channel, give the video a like, give us a follow on Twitter. Again, form your own strategies and your own opinions, but these are just some things that I'm thinking about with ZIL and the rest of the crypto market right now. So remember, with UDPI, we're all going to make it.